The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we'll come on here to the Diagnostic Trading Hour. And let's check out where everything is at right now. And looks like the S&P is currently down 1 point. NASDAQ is up 3.75, and the Russell is down 2.5. We have the Dow currently down 16 points on the day right now. And let's look on over. We got gold currently up 25 points. That's a 2% move on gold. We got silver up 0.685. That is a 3.5% move right there on silver. And copper is up 0.08, which is a 2.5%. So the metals are flying. We got oil up $1.38 right now. Right now it's about a 1.5% move right there. We got natural gas is currently up about 0.5%. And corn up 0.75, along with soybeans up 0.5%. So we got some pretty good moves on the commodities across the board. Right now, looking at the euro dollar, we have the euro dollar currently quoting just a couple pips above. It's close, so it's up 2 pips on the day. Got the pound dollar down 5. Aussie dollar, big old move down 115 pips on the day. And pretty surprising move. Had a huge move last night based off the GDP, only a 1% change, but a massive, massive move. And gave to a pretty cool setup. We'll talk about that a little bit later. Looking over at the euro yen, down 38 pips. Got the US yen down 37. And let's look at the pound yen down 67. Dollar CAD looks like it's up 48 pips on the day. And the dollar franc is down 19. Well, that gives you your current market wrap. Let's do a little bit of news review and talk about where things are. And not going to spend too much time on this because from Monday's archive show, I went into a lot of detail on the news. Gave you all the details, but figured it'd be good to go back and do, like I said, a little bit of review just on the news that has come out and ways that it could be traded, and just various things. But then we'll hop back on, talk a little bit more about hedges. And sometimes I think it can be a lost art. People get into it and they forget about it, and they get all excited and they come back. And I want to teach you basically how to hedge with Nadex, and that's been one of the main topics of the week, and just want to continue on that. So you can learn how to do it. If you're a futures trader, you can do this. If you're a forex trader, you can do this. If you're a Nadex trader, you need to know how to do this, because often you can actually have less risk using the hedge strategy than any other strategy out there. Okay? So with all that in mind, let's pull it up. Let's look at, we had, like I said, a few different news reports come out. And let me get those up on screen over here. There's a lot of websites you can use. Popular one, Forex Factory. Let's see, another one, investing.com. They have a little, a calendar on here somewhere. Haven't used it in a while. So they have, there it is, economic calendar right there. Forex Factory will get overloaded. So heads up, okay? Like it'll get overloaded. And investing.com seems to be a little bit more stable, right when the news comes out. And but I like all the history, the charts. Both of these have a lot of great benefits. One tip for you on the news is just because it's a red sign doesn't mean it's a big moving report, okay? Maybe important. It may have a heavy impact in the long term. That doesn't mean it's going to rock the Forex market just because they put a little red thing right next to the news indicator. So that's why when I go through and I do all the analysis, I let you know, hey, these are the ones that usually move quite a bit, okay? And it's very helpful to just understand that that's what we're looking for, that we're not looking for just every high-impact news event. We're looking for ones that actually consistently have a very large move off of news events, ones that are measurable, ones that we can trade off of. And you're not always going to get them. So you need to have a plan in place on how to take advantage of the trades when they go right. You need to know what to do when they go wrong. And so we're going to pull that up. And let's see here. Give me 1 second. I'll open that. And let's see, it looks like the first report we had came out, last night. Okay, last night we had this Aussie news report come out, and it is normally not a high-impact news report, okay? Let me pull this up. I'll show you here on Forex Factory. We'll look at it. And right here, GDP. Now, I mean, it's an important number. It's quarter over quarter. Obviously, it's a high-impact report, but usually it just doesn't have a massive rocking movement on the market. And a lot of times it just comes in pretty flat, like, on expectations, things like that. And if we go back, and I mean, if you look at, 0.6, 0.6, 0.6, I mean, it'd be off. But this was just a massive mover. So we're going to have to add this into our lineup and start paying a little bit more attention to it. But the move was just, it was huge. So I want to go and I want to show you this and maybe look at a couple things. So that way we can see how to potentially take advantage of this trade. And, I'll throw on the deviations. Okay. And that'd be the wrong one. There we go. All right. And so we go over here, and then we're going to go find that report. And check this out. I mean, this move is just massive. Right here, comes out, and then within, a couple hours there, we pull an 86 pip move out of the Aussie, and it just keeps on going. Okay? So just a great move right there. And let me see here. I'm going to add this on so I can show you the volume spikes and stuff that went along with it. The massive volume spike right there. And so you could have had a nice little trade going into, potentially like the 11 o'clock expiration right there. But if we go down to 5 minutes, I usually watch 5, 10, and 15-minute charts when I do these types of trades. And the type of trades I'm talking about are the V-spike trades. And just, I actually will pull up and I'll have all of them loaded at once. I got my 5, my 10, my 15. I got my volume. I'm looking at my deviation levels. It's a lot of information on one screen, but really it's actually pretty simple. I'm looking at when it hits a 1 deviation mark. Okay, notice how over on the, let me pull this up, back over here. I want you to see this. Notice how we got a big volume spike right off the news, of course. That's not a big surprise, okay? But it was at the 0.7. And it wasn't a 1 deviation high to low. It literally was just at the 0.7. But if I go back over here to the 5 minute, I actually got a volume spike right at the 1 deviation mark. And let me see. And this is a nice little thing right here to help me track, just where markets have moved to for actually being able to hit a deviation, high to low. So right there we hit that deviation mark, and then I get a volume spike at the exact same time. Okay? That's a reversal trade. Okay, that's what I'm looking for, a reversal setup. So maybe, you missed the news. Like I was expecting some volatility from Aussie dollar. I wasn't expecting an 86 pip drop. Okay? And things just flew on down, and I missed out on that report. But still had the opportunity to hop in, okay, and take advantage of the trade still by taking advantage of the volume spike trade. Because it moved so far, it hit that 1 deviation, we got a volume spike. And if I zoom in on this for you so you can really see how the trade plays out, volume spiked up. Look at the volume right here, how it's much higher than the 2 bars on each side. And then what I'm looking for is within the next 4 bars, so we got 1, 2, 3, and then it breaks 4 right there. Within 4 bars after that it breaks the high, and actually it breaks it right after it, but within 4 bars or less, it breaks the high of the bar after the volume spike. So there's the volume spike, there's the bar after it. So the bars after that bar, so if you said bar before volume spark is bar 1, volume spark is bar 2, and the bar after that is bar 3, then the bars after that break in the high of bar 3, okay, within 4 bars. Then I'm looking at a buy. And there's several different ways to do the trade. My favorite way is usually actually doing premium collection trades. And so I like to go in on these trades and, just try to collect a little time value. Because a lot of times what will happen is it won't just just fly back in reverse. It'll just go choppy and sideways. And so if I try to go directional, now you could also, a Forex trade, if you're a Forex trader, you could use this literally as a simple entry. Okay, you get an entry 1 tick above the high of this bar. So that's going to put you an entry at 90.55. Okay, you have a stop loss below the low of this bar, 90.44. That's not bad. That's 11 tick stop loss. Okay, and it moves up to a high of 90.70. So you got about 15 ticks. So if you like to go in and do some scalp trades, that's a great way to scalp trade. One of just many ways, of course, to scalp trade. But there's a lot of ways for Forex on that. Now you could also do it on just premium collection, just time, and looking at different expirations on the trades. And so let me see if I can find one of my ones from last night, my settlements. Let's see. I want to find one of the settles on here. So last night I went and I was throwing trades on the Nikkei, I was looking at the Aussie, and there we go. Okay, so we'll have an 11 o'clock expiration here. And I'm going to just grab a copy of this. There we go. Be easier to move around. So hop in, and right there, the strike is 90.60, okay? And so looking at that, we go over here, and basically it expires right up above 90.60 at 90623. So that was one of several examples that I was looking at on the trades. Now you also could have done a really deep in the money premium collection. I was doing a really close one. So because I was looking at 11 o'clock, and it was pretty late. I got 10 minutes to go. So I was like, you know what? I'm going to go ahead and just hop in this thing at like a decent payout on the trade. And it's a little bit different trade. Normally I'm not going in that deep. And let me see here. I want to see if I can find the original entry on that, the 90.60, 11 o'clock. But there's so many different ways to do these trades. And if I can find the best one for you, I will. I want to show you ideally how you can duplicate these. Here we go. Okay, and so we saw that one. And if I go over here, so this one right here, I bought the 90.60, okay? And not with it, just a whole lot of time to go there, but $65, okay? So you're looking at about a $35 profit on the trade. And, as it's flying back up, we're going in, hop in this trade, hop in it, get in it, and actually make a decent profit on the trade when it expires out there. So that's one way to do it. Now, a little safer way to do it, you need more time, okay? But a little safer way is to actually go in and, buy the strike below. So like the low right here, 90.45, so like maybe going in for like a 90.40 would be a little safer way, like I said, to actually pull that trade off. Looking at the 11 p.m. expiration. And that one would have worked as well. So 11 p.m., we got 7 p.m., we got 11 p.m. I did a whole bunch of different trades I was looking at. I did, just a whole series of them. And anyways, but the main thing I want you to get is go in, you got a volume spike at a 1 deviation level, ideally, or a 1 deviation high to low. Bar breaks one of the 4 bars after the V spike, okay, breaks the high of that bar. That's your long trade, okay, or your short trade if you're up at the positive 1 deviation. And then if you're doing like Forex or futures, then you go in and you have you could buy with your stop loss just right below the low. If you're doing Nadex, you could do it slightly in the money, you could do it slightly out of the money, or if you just want to totally do premium collection, then you could choose to strike underneath, okay, the low of where the market's at. And so I did these a couple times. And I did the 7 o'clocks off the initial news, but I also did some other ones. But we'll go over those in a little bit more detail when we get back from this break. There and there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we're looking at a few different things. One of those things that we're looking at is just talking about the volume spike trades. It's also a way to do a hedge trade. So, like I said, I talked about that a lot in detail yesterday. We might, if we have some time, go over that a little bit more today as well. But it's simply just wait until it hits a 1 deviation level, and you get a volume spike right there, and then you fade it. And it's a great contrarian trade. It's a great confirmation. It can be tempting sometimes. I talked to her this morning. Like, I just tried to fade at the 1 deviation, and I get that, and often that will actually work, but not always, right? And of course, not always on anything. But at the same time, you want some confirmation. You don't just want, hey, it's at this level, therefore it's going to turn around. So I want something else with it, whether it be volume or something needs to tell me this move is exhausted and it's about to go the other way. So volume spikes are a very good thing to do that, especially at a 1 deviation level. Or using another method is using the stop loss method that I teach, where if a bar closes below a deviation level, okay, then back at or above it, and then below it again, you move the stop to 5 ticks above. And so that'd give you like a buy signal, like right around here for a buy. So that trailing stop method could also be a contrarian trading method at like a 1 deviation level. And again, 1 deviation high to low also counts. Okay, so that pretty much wraps up the Aussie dollar. Like I said, it was a pretty nice, it was a massive move. It was a great move. Wish I would have got a hold of that one. Don't always get them, but still had the chance to go in and take advantage of the volume spike. And it's funny, I was talking to a trader last night, and he's like, Yeah, I missed that move. And I'm like, yeah, me too. I was like, but you can always take advantage of the volume spikes. And then, boom, there was a volume spike. So it was a pretty cool setup. And as we were talking about it, live right there. Okay. So what else do we got? Let's see. That's the Aussie from last night. And then this morning, we had the UK Services PMI. So we can go over here. We can pull up, look at what's happening today. Usually a decent report. Came in at 60.1. So I was more hoping for like a 64 or like a 51, okay? Like 65, 51 range on that. So I didn't really get a big range out of that trade. So let's pull it up. Let's look at it. It was released at 4:30. And so if we go in, we go right here. What was our move? Went down here to a low, got 35 pips. Low to high within 2 hours there. Got 50. Again, this is one of the most important things. This is also why I like trading the spreads versus the binaries on news. Because the binaries, this move probably would have lost. Okay? Because on the binaries, if you do a strangle, where you buy a binary above, you sell a binary below, and you get out if it hits it, if it doesn't hit your price, you're pretty much going to lose on the trade. Whereas a spread, it moves. We get a nice fast move down, starts moving back up. I can actually look to try to, get out at either a break even or, maybe even a small loss, but not a total loss. So I'd have to hold the thing right till expiration to get the loss like right at where the market is. So meaning you would have to, if my straddle was like right at 1.3, 1.63, like 40, it'd have to expire at 1.364 for me to lose on both sides completely. So I'm rarely going to take a max loss on the trade. And often I can grab a break-even if there's not a move. And my biggest clue to go for that break-even is if I don't get that big deviation. And again, I was looking for like a 65 to like a 51 or so, and we only got a couple points off of that on the actual release. So it came in at 60 on a 62. So I would have liked to see that obviously about 10 points lower if I was going to take that trade. And so we didn't take the trade, or we took the trade, but hop out of the trade. And hopefully you got a break-even or very small loss on that one. Wasn't the biggest one of the week. I mean, it had a pretty low probability. That's another thing. Is I was talking about this earlier. I was like, on this one, pound dollar, pound yen, 50% of the time it hits 50 pips. 58% of the time on pound yen it hits 50 pips. Now, the average move is like 60 to 70 pips on these trades. But it had a low percentage of movement. So, I share them with you, but I also go over their stats. So you want to listen to those stats, not just the, how far does it move on average, but how often does it move that far. So we got a little bit more movement. We got about 40 pips on this one. But again, as soon as you saw those numbers come in, like in that very small range, not a big offset, that's your clue to start, to get out of that trade as quickly as you can. Now, if you didn't, and let's say you had the 7 o'clock expirations, it would have came down to about where you were before. I mean, you would have given up some of that money. You would have came in pretty close to break even, or maybe let's say if you were risking $40 a straddle, maybe you lost 20 on it. But not a bad trade. But again, the percentage move was not huge. But we do have some big percentage movers coming up, and also had some butterfly trades happen this morning that went off pretty well. Anyways, stay tuned. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And hopping back on the news topic here, see what we got. Okay, so we had that report. We also had the ADP NFP report come on out. Usually not the biggest mover on the market unless the number is a big surprise. So let's hop on over. But a nice move right there. By the way, we just dropped to a 1 deviation high to low on the NASDAQ. So now looking for potential volume spike reversal on that trade. We'll have to keep our eye on it. But let's check it out. We got over here on Euro Dollar. And so Euro Dollar this morning, it's usually the highest percentage mover out of all the currency pairs on the ADP NFP report. And so we can see right here, it actually, the report came out, and let's see, what was our number variance, just to give that to you. So we're going through everything. So on the ADP NFP this morning, the expectation was 172. And it came out at 215, so pretty nice, release. Would have liked 224, but still was a very high number. Also, they revised up the previous number, which has a pretty big impact lately, the revisions. So let's look and see what kind of move did we get off of the ADP NFP report. Go in here, and it comes out at 815. And so like right here. And if we go to basically 2 hours later, right there, we got a 63 pip move. And so that one like I said, about the same percentage as the Chicago one, but it actually did move its average move, which was 60 pips. So we got a 60 pip move there on the euro dollar from the release down to the low. It came down to a 0.5 deviation level. Negative 0.5 there before pulling on back and reversing, but that should have been the lowest take profit you would have had. Knowing that 60 pips was right there, also it would be wise, maybe prudent, to have a take profit, maybe like right before the deviation. Okay? So, or start trailing it as soon as it hits that deviation at the very least. Just depending on how you want to play that, but expect to bounce off those deviations because that's just it's statistics. It's where the markets put their trades. Okay? So, let's see here. Looking across the board, but we got that's ADP NFP trade worked out well. If you did straddle or strangle on that, you should have been profitable on it. And let's see, what else did we have this morning? Again, I like to review these for you just so you know, hey, how did that work? I talk about it at the beginning of the week. I lay out all the stats, all the numbers, and then I go back and do a review for you. The other trade, Bank of Canada, scheduled its release on the PMI there. So let's look at that one. And let's see, trade cap. So their bank rate statement. Sorry, so the rate statement coming out. And then also we have the new home sales and then on manufacturing. And so looking at all of that, let's go ahead and let's take a quick little get over there, the dollar CAD. And even if you're not a news trader, you need to know about this stuff just to prep yourself to be ready, okay, for the potential moves. And so 10 o'clock is when the announcement came out. We already had a pretty decent move going on, so just a good thing to be aware of. But right about here, and we take that to basically 12 o'clock there. We got about 42 pips, so not as big of a move as we usually would expect on that. And, your risk is probably about $40-something. So, you're probably looking at being right around break even on this trade. This trade just barely moved. It just did not take off near as much as we would have expected it to. But, I mean, if you look at it, the rate statement, the interest rate, there was no surprise. ISM was a little worse than expected, but not that bad. New home sales, they were great. So you had the strong dollar, and then you had but you also have weak dollar going on across other, markets. So that's probably what stunted it. Think about like the euro dollar, a lot of these things, the dollar's getting pounded in a lot of areas right now. But on this, the dollar had strength compared to the CAD. And so that probably weakened the impact looking at some of those other currency pairs. So you're looking at about a break even on that trade. Again, that was not the biggest, highest probability one out of the group, but we do have the big ones still to come. Now, the other ones we talked about was doing things like straddles and strangles, or actually butterflies. So if you go in and you look at like dollar yen, I know some traders told me this morning they did do some of the butterflies leading up to this, and I talked about how the dollar yen will usually move about 25 pips, high to low previous to the announcement. And if we go over here and the announcement says at 10 o'clock, and then we go in and we look at an hour before 10, so let's go here, and then the lowest price, we get 9 o'clock. I mean, we barely get any movement. Leading up, we're talking like 16 pips right there. So easily could have put on some butterflies. That's where I buy below and I sell above, saying it'll stay range bound previous to the news release. And I guess you could take it right up to 10. So if we go 10 to, there's 9, right there. I mean, that's 27 pips, high to low. And that's if you started at 9:20. So you start at 9:30, even better. If you started even earlier, it wouldn't have mattered. It went up, it came on back down. And you got to look at like being in the middle, right? So if you're right here, you sell in the middle, it only really went up 15 pips and down, 15 pips on you. And so that worked out really, really well for doing a butterfly into that news report this morning on the 10 a.m. expiration. And then the other one was a actual butterfly through the news report, okay? And that was also on the U.S. yen. And that was basically saying, hey, you know what? Only 4% of the time does it move 50 pips 2 hours after the news. And usually average range is 40 pips. And so you could get in pretty early looking for like an 11 a.m. expiration. And if we look at this 11 a.m., here's our high. Okay? And you could really say, I guess, let's say if you got it as early as 8 o'clock. Here's your low. That's 44 pips. Now that's going 2 hours, before the announcement to an hour after. we're only expecting it to move, a very small amount of that. So let's say you get in it any time before then. Let's say this right here at 10 o'clock. Okay, 5, you got 36 pips. So it's depending upon where you get in, but no matter where you got in, I mean, that was a great trade. And so you could have butterflied that right into the news as well. Again, only 4% of the time does the U.S. yen actually break 50 pips on the U.S. ISM new home sales report. So made it a pretty cool trade to hop in and take advantage of. Now, we also had, of course, our weekly oil inventory report that came out today. So let's hop over. Let's look at that. And on the oil inventory report, looks like it came in at negative 5.6 million on expectation of negative 0.5 million. And oil gets a little crazy in oil inventory day, so you need to have some experience trading it before you just hop on in there. And but anyway, so we're looking at this right here, and the report comes out at 10:30, and we got a decent little move, but it comes in. Now, if you think about this, right here, okay. So inventory is lower, therefore price should rise. So it starts dropping. I would not be big on the selling side, okay? And then eventually it starts going long. That's what I'd be looking at, because now the oil is actually going in the direction of the inventory report. Less supply, higher price. So it moves on up $1.25 from there once you get a eventual long trade. And there's a lot of ways to look at that trade, but it's a hard one to do. I'll just say that oil inventory is very tough to trade. So that's one day that I'll tell many new oil traders to just avoid. Or if they're going to trade it, like just demo trade it and track your results as if that's its own day in itself, because oil just acts completely different on oil inventory day. All right, so that really wraps up the current day. What do we got for tomorrow? What's on the roster that you could potentially take advantage of? Well, one of the biggest, highest probability moves we have is coming up on the UK rate statement tomorrow at 7 a.m. And, obviously we don't expect a big change, but we do still expect there to be a big move. The average move is, 85 to 90 pips, pound dollar, pound yen. Over 80% of the time, both of those pairs move more than 50 pips. Therefore, that would be a trade I'd definitely be looking at taking advantage of by doing a straddle or a strangle on. And again, the rate statement comes out at 7 o'clock, so you're probably looking at like an 8, 11, or 3 o'clock expiration on binaries or spreads. Either one, you got those three. And look at all three, because you never know. Sometimes one of them will be just like a few dollars more, and you'll get like 5 more hours to have room for that move. But again, pound dollar, pound yen, 7 a.m. on the rate statement. Now, you're only going to have a short time for that thing to move, so either it needs to move or you need to have like the 3 o'clocks, because it'll go flat while it's waiting on the ECB first the rate statement will come out, unless there's some big surprise. That shouldn't be any impact at all. But then the press conference will happen, and that's where the volatility happens. The press conference is going to happen at 8:30, so you could use, say, 10 o'clock or 3 o'clock spreads or binaries on this. Obviously the euro dollar, euro yen are going to be your choices. Both of them move a little over 75 pips high to low on average after that comes out, with about a little over 80% of the time it has moved at least 50 pips at a minimum. So you got the pound trade. Right after that, you're going to hop in, you're going to have your euro trade, and then at the same time, you're going to get the GDP. Now, that GDP, unless it's off, which it easily could be. We've had the government shutdowns, we've got all this other stuff. Who knows? I mean, the economists are supposed to be going to forecast it. If it's off, it could be like that Aussie number, where the thing just moved like 80 pips. But unless it's off, usually not the biggest mover. But we should get volatility regardless, simply because of the ECB press conference. And your best one on that is actually pound dollar. So over 70% of the time it moves 50 pips, with an average move of 70, little over 70 pips, average range high to low. But if you're already in a pound trade, then you don't have to worry about it. You can just take advantage of the dual volatility there. And let's see here. We'll have U.S. unemployment claims. That should be sort of a moot point unless it's just dramatically off. They haven't had a big impact lately. And then we'll go into Friday. On Friday, we're going to have our dollar CAD report coming out at 8:30. There's a lot of dollar reports and a lot of CAD reports coming out at the exact same time, expecting a very large move. We're going to have the CAD unemployment change, the unemployment rate, the labor productivity, the U.S., the NFP reports coming out, the unemployment rate here in the U.S. is coming out, average hourly earnings, all coming out at the exact same time. So we should get a lot of volatility on the dollar CAD on Friday, okay? And so that report, you're looking for about an 80 pip move in the dollar CAD, and at least 80% of the time in the past it has actually moved at least 50. So why do I keep bringing up that at least 50? Because usually what we're doing is we're risking less than $50 on a trade, like $35, $40 on a trade. If it moves 50 pips, then we got to be able to get out at least at break even. So that's why we're looking at that 50 pip move. And then let's see here. The other report, the other stats, okay? So the USD CAD is 1, just because all the things are coming out at once. But even just the NFP by itself, euro dollar, dollar franc, pound dollar, usually massive, massive movers. We're talking 100 pips on euro dollar. We're talking 110 on dollar franc. We're talking 105 on pound dollar. Big moves. And like euro dollar, 100% of the time it moves 50 pips over the last like 5 years. Dollar franc, pound dollar, almost 90% of the time it moves 50 pips. So big, big movers. You got to be watching them, and you got to be looking. But I mean, like last time I pulled this thing off, I couldn't believe I got the 3 o'clocks expirations for literally like $5 or $10 more. And we're looking at a 100 pip move. I don't care about $10, okay? And I was able to ride some of these like on throughout the day. And so just something that's definitely worth you checking out are those reports right there. Let's see here. That's pretty much going to give you the summary of the news for the week. Next week, by the way, very, very light. There's really nothing that's news tradable next week. So expect a quieter week. And, of course, everybody's going to be analyzing everything, looking at everything. And, of course, then Congress is going to start coming back into focus because by the 15th, they're supposed to have some plan together, which, they won't. And so then budget talks and all that, debt ceiling are going to start becoming louder and louder. And just in time for the holidays. But that'll start coming out next week. But we really don't have any big major impact reports. But the cool thing is we have some huge ones at the end of this week that more than makes up for that. So hopefully you're able to take advantage of those. If you are new to all this, trying to figure all this out, hop on over to TFNN, click on the Nadex banner right here, and just go to Trading Demo Trading Account. Click on that, and that'll get you access to the platform so you can actually start playing with this. If you want to get some education on it, then check out TFNN. Go over here. We have the Diagnostic Box Spread Analyzer. Comes with a ton of education in here as well that you can go in and walk you through things step by step, how the spreads work, how the binaries work, how the scanners work. The deviation levels are posted every day. You can ask me direct questions anytime you want to. You can post those in there and be glad to help you out. Okay? All right, let's check out where the markets are at right now. And we actually did. I got a trade. It's like, hey, we got that NASDAQ reversal. Yes, we did. Popped on up in there. And let's look at that right now. We'll go in and pull it up right here. I was talking about that a few minutes ago. And basically said, hey, we got a V spike. May want to be looking for one. And look at that. Massive volume bar. Okay. Got a deviation high to low. Remember, 0.5 to 0.5 does equal 1 right there. So, 2 halves equal 1. And then we're looking for this bar right here, the bar after the V spike bar. Okay, the big volume bar with the 2 bars on each side being half of it, with that high being broken. It was just broken. So you could be looking at, potential NASDAQ reversal trade. Now, again, don't expect this thing just to fly all the way back up. I'm not trying to just get a massive reversal move. Now, that sometimes it's cool when it does happen. But more often than not, I'm looking for sort of a flatter, choppier market, and that's why I will focus more on premium collection with the binaries or scalping. If I'm going into scalping for maybe, 5, 10, 20 ticks at most. And on NASDAQ, we're talking maybe 4 to 8 ticks at most. All right, we'll stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. So checking it out, looking at the indices, starting to do a little pop reverse off that one deviation move. And so if you're looking for a contract, it moves so far, the intradays really wouldn't have done you all that good because there really wasn't anything available. You can hop over to the dailies, though, maybe like a 34.48, buy at $80, and starting to move on up there. So looking to take profit, maybe at 95, just a quick $15 premium collection trade on that one. And so, like I said, there's a lot of ways to do these trades. You just got to figure out what's going to work best for you. What do you, how do you like trading them? But let's see here. There we go. But yeah, so you can go in and just set those in right there. But that's one of, like I said, many ways to do them. I'm actually going to set my take profit on that one. So let that thing go. And again, time is my favorite and price is my favorite. So if time goes by, everything, you're good. And you can even look at, different ways to hedge them. It's pretty cool. There's a lot of cool ways to even hedge out some of these trades. You just got to be a little bit creative. You got to think, outside the box. And you'll be amazed what, really can be done as you start combining these different contracts together. But let's go ahead and take a look. So we got that one deviation high to low right there on the NASDAQ. If we go up on over to the S&P and check that out, we're going to see pretty much the exact same thing on the S&P. And also get the volume spike over there. We can go over, we can check out the Russell. And on the Russell right there, we got to move up 0.5, down to 0.5, 0.7. Actually, moved down to 1 deviation. So a massive move right there on the Russell, a 1.5 deviation from high to low. And so it's bouncing right now off of its 1 deviation level and minus 1 deviation. So that's a nice solid move. Hopefully some of y'all were able to take advantage of some of that, because it was a great rise this morning and then a great fall on the way back down, and everything just bouncing right off that half deviation level. Let's go. Let's check out the Dow as well while we're at it. Knock out the indices over here. And so we can see the Dow didn't quite reach the half deviation. Got really close, but moved on back down. Actually did hit a 1 deviation high to low. So did get its full deviation move in today. Actually did not trigger a volume spike on this last one, so it wouldn't quite double. But the other 3, looks like they did pretty well. Which other Nikkei, I was checking that out last night, having a little bit of fun on it. And it had a massive move. It was like 400 points. And just flying down. And let's see here. You go in, you get to see this thing. I mean, it's just literally flying all over the place. But some pretty cool moves. We can break down. You can look at like 10 minutes. Maybe that's what I was looking at last night. But I had a couple things where we actually had several trades on the volume spikes and looking at deviations on those. And, just trailed right back on up. And that's what I was looking for. I was looking for it to trail back on up. It came down, hit it, bam. And it's the perfect reversal off of that. We'll go in. Let's check out a few of the other markets. We'll look at gold real quick. And gold today, this massive rise. All the commodities there. Went down to 0.5, went up to 1. Went flat for a while right there. So it went up to, we got to move down here. Got a great, talk about V-spike trades. Perfect V-spike trades hanging out down here. It's not doing anything. Moves on up. Get a nice V-spike trade at 925. It just sits flat. Literally all the way until like 12:15. So really, really cool V-spike trade right there. And again, that's a 1 deviation from low to high, right? So 0.5 plus 0.5. So great trade right there off the 1 dev level. And then finally decides to just take off right there at the end and moves on up a whole another deviation and a half. So you got to move down to 0.5 and up to 2. So 2.5 deviation move high to low today on gold. Looking on over at silver. Silver also being a big mover today, and moved on down to 0.5. Volume spike, boom, moves on up here, and finally get one right there. Stays flat for a while before taking off and actually breaks the 2. Almost hits that 3 deviation move on silver today. All right, y'all have a great day, and I'll see you here tomorrow on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.